Our next guest is Dee Carter. Dee is president of the Carter Financial Group in Midland, Texas, and also a repeat guest of the Income Generation. Dee, welcome back.
Thank you, Dave. It's good to be with you again.
So tell us, the economy, second, third quarter economic numbers, the GDP looks strong so far. The jury's out for what's going to happen in the fourth quarter. What do you think is going to happen economically in the fourth quarter, and how is that going to affect us in 2019 in terms of the economy?
Yeah, I have to look at everything based on West Texas, obviously, because that's where I'm located. And right now, with the oil prices being down about 20% from what they were just a couple of weeks ago, we're looking at the economy to slow down, we think, here in this area. In fact, we're already seeing a slowdown in the economy right here in the West Texas area, which really affects all of Texas and in some small way affects the rest of the United States because of the necessity for the petroleum industry. So I think the economy is going to slow down a little bit. I don't think it's going to get much faster than it is maybe right now.
Well, I was going to ask you about oil, but now I don't have to because you led with it. How is that going to affect the stock market? Does that mean we'll have an end of 2019 with a lower stock market than we went into 2019 with, in your opinion?
Well, I think the market's jumped around so much in the last couple of weeks. In fact, the last couple of months, it's gone from 27 down to 25 to 24. It's all over the board, and that's a good indication of the way people are feeling, because the stock market goes the way people feel. They buy mostly on impulse, on greed, or trying to make a little money. And if they're not buying, then the market's going to go down. My clients here are backing off from the market big time. They're starting to look more at income situations than growth situations, just because the market is so unstable right now. So I'm expecting the market to decrease again over perhaps the next 6 months, the next year. We could see another 15 to 20% drop. It's interesting. I just read an article where 28% of people felt it was good, 27% said it was bad, 33% no change. People just aren't really on page or on score with this thing.
You're the second person who said possibly down 15 to 20. One guest said up 12 in 30 seconds or less. Is the Fed going to make it worse based upon Powell's comments from last week, by hiking rates too quickly, or do you think they're going to smarten up and hike less in 2019?
I really think, based on what I'm seeing, they're going to do less. They talked about 3 times. Now they've backed off to maybe 2. They're starting to see the big picture, I believe. So if they will keep it in that area, we're already at 2.25 to 2.5. If they will keep it in that area, there may be no higher than 3. I think that's going to be okay. But it's still going to affect us, because out here, the Fed goes up, the rates go up, the price of borrowing money goes up, the drilling goes down.
Right. So they're just going to keep it from making it worse. I get that. Dee, we have to leave it there for now. Thanks so much for this. We appreciate it. Love to have you back. And stay with us. We'll be right back with more on the Income Generation. I'm David Scranton.